be or can only be executed on a margin account. So if you're trying to do this future trade on Webull or Robinhood, you will not be able to do that. All right. So you have to go to a legitimate trading application. You have to open an account. Like you can go to Interactive Brokers, you can go to Thinkorswim, you can go to Tastyworks, you can go to E-Trade, you can go to Fidelity, you can go to Bank of America, Merrill Lynch, but you need to have a margin account. And each of these trading companies, they have set up a margin limit that in order to execute a future trade, you need to have minimum that much dollar amount in your account. For example, for a single ES, which is S&P Micro, you have to have about $13,000 in your account to trade that. All right. This changes depend on different type of trading platforms, right? But consistently, it's about in the range of 13,000 to 12,000. All right. But there are other brokers. If you like trade too much, they will offer you intraday margin, which is like 1/3 or 1/4 of this $13,000, $14,000 amount, and then you can execute it. But a very important aspect of futures is that a future, let me just open one lot of future in case of ES is $50 per 1 point move. All right. So if you are a trader who has a limited dollar amount in their account, I would recommend not to go into futures. They are risky, and futures can be very volatile. Like they will take your stop loss and come back to your same point in just 1 second. All right. So you have to keep this thing in mind that even I am doing futures, I am predominantly doing the futures in the after hours as compared to the daytime. Because during the daytime, futures is most heavily traded. And if you do not have a leverage of like 10 to 20 points, like at least $1,000 as a stop loss, it's going to kill your account. All right. So please be mindful of these points before you even jump into futures. There are multiple type of futures we have right now. In current aspect, we are going to talk only about the index futures. All right. Index futures can be based on our four indexes. We have Dow Jones futures, which is YM. We have S&P futures, which is ES. We have NASDAQ futures, which is NQ. And we have Russell future, which is RUT. Like all these are micro futures or mini futures, right? That for this is about 5 lot size. This is about 50. This is 20. And I think it's also 50. There are main indexes, like for Dow Jones, we have DJI. This is a future in itself. For ES, you have SPX. This is 100 lot. All these, like and the slash items like mini Dow Jones, mini ES, mini NASDAQ, mini, you can trade 23 hours in a day. But SPX or NDX, you can trade only between 9:30 to 4. So I would recommend avoid these NDX and SPX. If you want to trade futures, try to move into ES. Or if you want to just learn how to trade ES or NASDAQ, we have micros, which is MES and MNQ. For this, it's like 1/10 of the margin you require. Like I said, for ES you need 13,000. For MES you just need $1,300. And one tick in S&P will mean $5 movement here and on upside or downside. Similarly for NQ it is $2. All right. So you have to be mindful about that. Yes, we have 4 indexes and each index has a lot. It's not consistent like 100 lot throughout what we do in options, stock options. It is different depending on the different type of index. Okay, so these are the index. Also, we have VIX futures, which I think very limited people do. We instead of VIX futures, we trade VXX, which is an ETF. All right. Then we have commodity futures like soybean, live cattle, and a couple of more. Then we also have precious metals, like we have gold, silver. These are very volatile and they require significant margin amount, at least $25,000 for one late to be traded. All right. Then we also have oil and gas. I'm just giving you all this information because 90% of people, they like don't understand what these symbols are. So we have crude, then we have natural gas, then you can use lead. I'll not go into those, just giving you examples. All right, so we target this because it's easy to trade ES after hours because all these indexes, they work very well technically outside the market hours. During the market hours, there's too much of volatility because of uh, good volume, plus there's news, plus anything. But outside the market hours, they tend to behave using algos, and algos try to respect the technical levels. That's why I prefer ES and NQ outside the market hours. All right. Any questions on these points that you have not understood before I move into the details?
Naval, one quick question.
Yes.
Is there a micro for crude as well?
I have not tried that.
Okay. All right.
Let's
Thanks.
just check it. Yes, you have micro crude features as well.
All right. Thanks.
And one more thing you need to be of mindful that from last 1 week until the election days, the overnight margins will be increased. So supposedly you have a lot of futures for $14,000, $15,000. All of a sudden you find that yes, your trade has already executed by system. It means that they have increased the margin and your account did not had that margin to cover, and it will automatically execute it. The other risk regarding futures is that futures stop loss may not even execute because there are two types of stop losses across the global markets. One is on quote and one is on that price and below. US market and most of the trading for platforms here, they give you stop loss on quote. So if you have put a stop loss, like for example here, 34.50, right? And you put that, yes, my stop loss is 34.50, trigger it between the range 34.40. If there is a gap down and that 34.50 never comes, stop loss will not execute and you will carry on bearing losses. So that's why futures are very, very risky. If like in case of future, if a candle has passed through and it has passed through your quoted price and you have put a stop loss between your market price and your limit price, no, the stop loss price and your stop loss trigger price and your limit price, it may be possible that it may not even execute. I have burnt my hands a couple of times on this. That's why I'm giving you all this information. All right.
And to avoid for margin and everything, you can do like options on futures right now.
Yes, I will come to that.
Okay.
Like, um, okay, there's Raghu bhai has started that, so let's take into that direction. Okay, so if we have futures, right?
Can you hear me?
Can somebody put their on mute?
I'm talking. Can you hear me?
Not clearly.
My point is that if you have a stop loss, like 34.40, and any price which is below that will execute automatically. I have seen in the trade station clearly, like I used to play like that. So if any price, if it gaps down to, let's say like 34.20, next day it will
Like, I'm
stop.
not able to hear. Can you put that into chat? I can read it, or somebody else can read it and tell me.
Satish, your voice is breaking. Please put your question in chat.
I can open the chat. Yes, I will cover the option aspects of futures.
Naval, I had one question. Are you using, what kind of screen are you using that you can see all these different symbols at
So
the same
here,
time?
if you go into trades, you have a future trader in TOS. I'm in TOS, Think and Swim.
Okay, so it lets you see a lot of different,
It gives you a list of all the futures.
all at one shot screen.
Yes,
Okay, thank
it's
you.
like you can set up everything based on the grid size.
Okay,
You can increase as many as you want. But when I'm trading, like when I go to the trade window, I'll show you what I
okay,
use to trade futures. It's just to give you a glimpse of what all possible futures are there.
awesome. Thank you.
Mhm. So, Satish, you were asking a question. Did you put that on the window? Chat. Yeah. So if you keep us not the stop loss limit, again, it all depends on what type of stop loss you're putting. Like usually when you put a stop loss, there's it does not guarantee that it will execute. Because in US market, it does not trigger as soon as it goes below 34.20. It puts the stop loss on the quote price. If the quoted price was 34.20, only then your stop loss will get executed. Like if you have realized that sometimes I mentioned that yes, the price went down, but it never hit my stop loss. I put that in the admin alerts a couple of times just because the stop loss triggering price, which I mentioned in my trade, that was never quoted. There was never a trade on that price. And that's why it will simply jump. That's again, it depends on which platform you're using and how that platform is working. And you have to see whether there was a trade on the triggered price as well. In daytime, the futures have so much of volatility that yes, it will execute your stop losses. Overnight, that all of a sudden there is a tweet from Trump, boom, there it goes up and down. It will simply bypass it. So you have to be mindful. And when you are doing futures, it's better to hedge with a future option. For example, if you are shorting, let's say ES right here, 34.80, 70, okay, you short a future, then you should buy a corresponding call to hedge it in case it moves up. So ES has future options. So let me just show you right here. Let me just cancel this. They trade in the similar manner like what we trade in SPY. The only benefit in ES options is you can trade them 23 hours a day, 5 times, like almost 5 days a week. They have same expiry like SPY, 3 times a week, Monday, Wednesday, and Friday. And they have higher premiums as compared to the SPY options, but they are potentially in the same ratio. So in this case, for example, I am planning to short 34.76 futures. Okay. I kept my stop loss at 3,500, giving me some bandwidth. In order to hedge, I will buy a 3480 call. 3480 call is about $13.25. So I'm investing about $675 something to get a hedge on my futures. Now, in this case, because my position is short, all of a sudden there is a vaccine news. The futures will bump up 100 points. My stop loss will get executed, but I had a future option as my hedge. Then I will get about 100 points in that. So most likely I'm going to be a winner because I will have about 60 to 70 points on my option trade. And each point in option trade is about $50. Okay. So whenever you are doing futures and you're anticipating any kind of news or there's an event across the globe, make sure you have a hedge. Otherwise, future can wipe out your account in just one trade and you will not even understand what happened. All right. So future should be hedged with the proper stop loss. If you are anticipating that, yes, there is going to be a news or there is going to be a global event or there is going to be something big which can increase the volatility, make sure you hedge your future options. It looks very like it gives you kind of a motivation that, yes, Naval is doing trades on futures. But if you remember, I have lost $46,000 in one night in futures. I mentioned that. So it's not easy to trade. And all of a sudden, if something goes nasty, because as a human, we have the tendency of hope that, yes, it has gone down, it has broken my stop loss, it will come up and I will cover it. The same thing had with me, and it went down, 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 and I lost too much. All right. So these are the basic principles you have to keep in mind before even jumping into a futures trading. All right. So now I will go and set up a future trade or show you.
Naval, very quick question. You mentioned the investment was about $600 for that option?
Yes, it's a 50 lot size.
Oh, okay. Okay.
So for again, like you have to check which option you're using. If you are using mini, that's at 50. If you're going micro, it's about 5. It's 1/10.
And when you hedge, how far you pick up? Like you go with a week in expiry, 2 weeks? What's your pattern?
No, I do the nearest one.
Nearest one, okay. All right.
Because the premium here in ES options are really, really high.
Right.
Okay. So if I am buying, or let's say I'm, in this case, I'm shorting a future, right? I'm taking a calculated risk that, yes, there is a good resistance here. There's nothing positive coming out. There's a good amount of supply. And based on that, I want to risk $600 because if future goes down by 20 points, my $600 are covered because I'll make like $1,000. So net, I'm still plus $400, right? But if it goes the other way around, it will simply boom $1,500 from my account. And if I don't have any hedge, I'm like end up with a big loss than what I was trying to make profit. Because these futures are very, very volatile. All right. Any other person who has any questions regarding these basics of futures?
So no stop loss for this hedge option, right?
This is a hedge, so there's no stop loss. You don't want to be in a position where you're cut from both the sides.
Right.
Your stop loss from future hits as well as your stop loss from option hits.
Okay,
But
thanks.
this can be very, very interesting, especially on Wednesdays and Fridays afternoon, when around 3:30, when these premiums are reasonably down to like $2 or $3, and we usually have a pump or dump session, and all of a sudden 34.90 to 34.50, 40, right? It can give you $40 on your $2 option, but that's hero zero something. it's going to work or it's not going to work at all.
Okay, thank you.
Okay. Plus futures open on Sunday evening, 6 o'clock. Like today, 6 o'clock, futures will open, future options will open. So if you see something good coming and you have a margin trading account, you can buy something and wait till tomorrow. And if you're only doing the future options, please make sure you do in spreads, because the future options are very, very expensive. Like even for 3 or 4 lots, you will end up around $8,000 to $10,000, because you will tend to buy future options at least 4 to 5 days ahead, because you're not doing futures, you're just buying future options. So if I show you,
I'm sorry, I had a question. The future options, can you trade them after hours, or is
yes,
that?
yes, it's 23 hours a day you can trade them.
Okay,
So
thank
you
you.
can trade them. You cannot trade them between 5 to 6 p.m. and between 4:15 to 4:30, and in the night for like 15 minutes.
Okay, thank you.
Rest you can trade them throughout. Even on the like days off, like tomorrow we do not have day off on Columbus Day, but if market is off, the future options will still be there and the futures will still be there. They'll be getting traded, and they have very, very high volumes. It's not like that they are traded very lightly. They are most predominantly traded instruments in the market after SPY. SPY is a version of SPX ETF. SPY is the mostly traded instrument in the entire globe, and then these futures. All right. So I was showing you example of future options. So here, let's see, this is an October 20 expiry, 5 days, meaning this week expiry option. Look at 3480 call. That's about, if you buy 2 lots, that's about $3,100, right? So if it doesn't go in this direction, it's going to lose its premium. And the decay here is really, really good. That even by the time in the morning, when the market opens, it is trading around this range, this will lose at least $3 to $4 by that time. So hedging it with a future or buying a future option with a spread is the best way to do futures. Okay, now let's go to the future charts. Let me clean up everything here. So the first and foremost thing you need to do is, when you're doing futures, you need to have 3 windows aligned next to each other. Okay. One is for 3 minute, and I will explain you why. One is for 30 minutes, and one is for 1 day. Okay. And you need to have, if you want to replicate this, you can replicate it. You can add studies. Like these are the conditions which I use. So I have added 3 studies here. It's 1234 and 50. Once you set this, let me change the candle type as well. So when you're doing futures, the first thing you need to see is this is the green line is 12, this is 34, and this is 50. Whenever there is a cross between the 12 and 34 on 3 minutes, I'm being very specific because this is the setting which I use. On 3 minutes, try to get long, okay? And you have to see it crossed here. So you can go long as soon as the candle crossed this green line. Candles have a tendency to go up and touch the green line and take it as support. So you should go long somewhere here. And what should be your target? Because you don't know here how long it can go. All right. For that, you have 30-minute setup. Here you will do the same. And again, as I reiterated, these behave technically very much as compared to you see them in the daytime. Okay. So this is our trading zone. Let's go to the front. Right here. Okay. So let's say around 3:30. Let's take the same time zone. Somewhere here. Okay. This is the direction. The green is up. You went long here. The half an hour candle said go long at 9:30. So as soon as the day opened, it gave you an indication that yes, you have to remain long. All right. So 9 o'clock, 9:30, you start your day, it's gonna long up. But if you see the 3 minute, it changes many times during the day. So this is here when you will do scalping. If you want to trade futures for 5-10 points, you are going to use 3-minute setup and you're going to follow simple principle. If my red line is up and my green line is down, I'm going to short. And as soon as you short, you will see 1, 2, 3, maybe 4 or 5 candles. 3 candles is your target always. That will mostly give you 4 to 5 points easily. Okay, if you see here, let's say I shorted here, somewhere here. Okay, the candle was 34.69. Okay, now all of a sudden I got 336, 66, 65, and about 63, 62. So from 69 to 62, I can book and I should book. In scalping, you have to be very careful. As soon as the next candle tends to go up, please exit your position because your goal is to scalp. And scalping is 3 candles, 1, 2, 3. Mostly 3 candle. Fourth candle, you have to go out. Similarly, you have to wait for the same opportunity again, that as soon as the candle tries to reach up to the red line, your intention is to short. But here you need to see that the red line is coming down and the green line is coming up. But it is the tendency that yes, we will short here. So as soon as you short here, you're going to have a 5-point stop loss for scalping. I will come to the overnight trades, but we are talking about scalping in futures. For scalping, the futures, you have to, like once you are in position, you have to trade 3 candles. 1, 2, 3, anytime. Suppose here, okay, it converted green up and the red down, meaning that yes, you have to go long. So you go long here, maybe here, because you may were waiting for this to go up above the green line. So as soon as it does, let's say you entered here. That was, look at here, that was around 34.60 something, 34.60, or let's say 34.70. So you went long here. So 3 or 4 candles, 1, 2, 3. You got 7 points. If you were here, you will got 7 to 9 points. It went to 79. But try to be like, what's the right word? Try to be very specific on the scalping part. 4 candle on a 3-minute chart is your target, no matter what. Okay, you will get 5 to 10 points. So it's like a ATM. You go into the futures, you buy based on this signal. As soon as the candle is above this, you buy it or you sell it, and you wait for 3, 4 candles, and then you are out. So you have to be effectively on the screen for all this time. That's why I tend to do them late in the night, because it's easy. Nobody's disturbing me. I do not have my office work and I can trade them. Did you got the scalping part?
Naval, one question here.
Yes.
Now, once you see that crossover, so in that case, you take your position immediately, or you try to take the position at the best price, like at the best available price. And if so, then how you do that? Like once you see the crossover, then sometimes what happen if we take a position, then after some time we realize that we got that in a higher price. So how to avoid that one, and how to get that in like a best price to
See,
take a
you
position?
can never get a best price and you can never sell at a best price.
Okay.
Okay.
No, best price means not that best price means uh, like sometimes what happen if we buy if we take a particular position, then we get something at a higher price, and then we realize that we can buy the same position at the lower price as well. So that's what my question was. Yeah.
Scalping, we're talking about scalping here.
Mm-hmm.
Scalping is primarily 5 to 7 points,
Okay.
not more than that.
Mm-hmm.
Okay. So
Okay.
if you're trying to scalp, you will see you can take anywhere. Anywhere you go above this line here, you have to
Okay.
see the candle should, if you're shorting, candle should go up above this line so that you can short. In case of green line, you have to see the candle should cross above the green line so you can buy. So in this case, for example, if we go back, let me just close this one and explain. Okay, now it will be better. So let's say, okay, let's say you saw here, okay, at this point, see, there's a crossover between the 12 and 34. So you try to enter here. Look at the price on the top underneath this. Just make sure you're looking at this one. Here the price says 34.50 and high is 31.51. So there is very limited margin between like high and low. You see, I want to buy here. You bought 1, 2, 3. If you are here, you are going to get maybe 2 points at most. Okay, then you wait. Oh, it came back to your price. No, it will always be up than the crossover. So if you put a stop loss and candle came down, either it should hit your candle's stop loss or it is going to follow the green line which it has. So in this case, let's say you bought it here, you waited 1, 2, 3 candles and you didn't want to book for 2 points. You thought, okay, let me just wait. You waited, it came down. But if you bought here right after the crossover, the candle did not came, so you're still in your position and above the price. Okay, you waited. Again, the three logic, 1, 2, 3. Still, you're not making too many points, maybe 1 point at most. You thought, okay, let me wait. And then you see 1, 2, and 3. You got 5 points. You are out here. So you have to repeat this exercise in terms of scalping. We do not have to follow this when we are doing like proper future trades. This is only for scalping. When you have a chull to trade and you have nothing else, you come on the screen, you do this, trade 3 candles, come in, come out. That's it. This is for the people who are very, very like free and they can purge into the screen all the time and can trade very quickly with no emotions at all. Follow 3 step, 1, 2, 3, buy, 1, 2, 3, sell, 1, 2, 3, buy, 1, 2, 3, sell, something like this. This is for future scalping trade. Here you have to be respectful of the lines and you have to understand every time candle goes away from the line, it has the tendency to come back. That's why I'm saying if you have 3 candles, there will be a tendency that the fourth or fifth candle will try to come back and respect that green or red line, whatever you are doing. Look at here. Here you try to short, pump, pump, and it tries to move up. It will hit your stop loss. Every time a candle goes back, it will come back and test its line. Now this thing will be clearer that how big it can go. This will be clear in a 30-minute chart and a 1-day chart, which I will explain. But if you're doing just very basic time pass trading for scalping, this is what you need to do. No indicators, nothing, just follow the price action. And for that, you just need to add one more thing. It's and if you're comfortable with volume profile, come on. That gives you indication of how many trades are contracted at these and these prices. So you look at here. As soon as it went up, there were hardly any trades because this was the last minutes on Friday. But during this range, they were traded heavily. So you need to find out where you lie in this chart and see what you need to do. It's only for scalping. Any questions on scalping, guys?
Hello.
Yes, one by one.
Hello.
Yes. Hello.
Hi, Naval. Naval, I understood that how you take position, but while booking the profit, like how you do, like you use the limit order or you like do the trailing stop loss to get the maximum profit.
There is no trailing stop loss in futures.
Okay.
And there's no stop loss in future options.
Okay.
So you have to, that's why I'm saying, I follow the 3 candle principle. 1, 2, 3, and 5 points. That's it. 5 points, 7 points. If you buy a future and you are tending to 5 to 7 points, that's about $250 to $350. You can buy, you can sell, buy, sell, buy, sell. It all depends on you. And if you want to be like very specific, that I want to see what is my what do you call levels or my trade, do a regression
Is there
channel.
any like PDT kind of thing in this, or it
No,
is
there's no
like
PDT in here.
outside of it?
So this is your regression channel. Here you will see this was your latest high, like first high point or low point, or this was there. This is your baseline. And here the candles are moving up and down. This is your positive target. This is your negative target. If you're shorting,
Okay. Now, what indicator this one?
this is regression channel.
Aggression channel. Okay.
You can draw it. And this really gives you a good idea of where these things tend to get support or tend to get resistance. So let me just, I don't want to like give you so much information that you get confused. Look at here. It went up but failed, came down. Tried to fight here, broke up again but failed. Tried to broke up but again failed. Then went down. Here broke up this, then went up, faced the resistance, came down. So every time you test the resistance, you are going to test the support after that. It's a basic principle in trading. Once you test the support and you fail to break out, you are going to come back and test the support. So here it was the resistance, it failed, it is going to come back and try to test the support. This was the support range, it came, but it didn't touch. So at least it came back. Now it's going to go up and it's going to test this line. So let me just scroll. And look at the volumes. So for last couple of days, I was saying that the price action was really, really bad. Look at the volume here as compared to the volume here. The volume is pretty low on Friday. So even if the market was going up, the market did not have strength. That's why it was trying to go up and then came back, go up, come back, go up, come back. Okay. Don't try to do scalp in a live market, which is 9:30 to 4. It will be very, very difficult to make money in a live market for that. All right. Now there are questions.
Naval Bhai, do you use
Yes.
any market internals like volume spread difference, ticks?
Should I explain? Because those will become more tricky. Because I don't
Okay,
know
let's
how many
go ahead
people
with your
even know
content. Yeah.
ticks. Like these are the market internals.
Tick, TI, no S. Right?
This is the market internal. So usually a value on 1 day chart. It values is from minus 2000 to about 2000. Okay, so you have to first understand what these internals are. There's a difference between the positive and the negatives in S&P and there's tick. Usually when there is a range of minus 1400 something here, 1400 to 15 or 1500, that's the time that where market is going to bounce. And when the market reaches here, the 1500 range, you will see the market is going to get down. So this is primarily when you want to understand which direction market is going or whether the market is strong or not. This is based on all the stocks. And usually you see these signals right here. It was 1400. And if you check on 20th of August, from 20th August to up to this point, the market was up from 9 up to 914. And then from September 14, it has still not changed. It's negative. It's trying to go up, but every time it's going up, it's getting shorted. This is tick. There is one more which I use. I use only two. SP रघु भाई नाम उसका क्या होता है SP doc जिसमें S&P के सारे पॉजिटिव नेगेटिव आते हैं. I always forget that.
Oh, VOL SPD, spread difference, right?
Spread difference. No, it starts from SPD something. It is on my remote machine in the office. उस पे मैंने सेव किया हुआ है.
Okay.
SP doc something. SPD.
You mean ADD volume?
No, it starts from SPD something. I'll check. But these are like all the signs with dollars. This gives you a market internal. Like this is a difference between the volume of positives and negatives in Dow Jones.
Yeah, here, bhai. That's what I was saying, right?
No, there is one more which I use.
Yeah, VOL SPD, the volume.
No. I use SPD, which gives a very clear indication.
Okay.
I'm not remembering the name. I have set
Try
up
you
everything
say-
on my remote machine, so वहाँ पे it's easy.
You try say VOL SPD.
Not this one.
Not this
Usme I
one.
have candles with everything.
Okay. Yeah, we can
That's
take care
the
of it next
separate
time.
one. And that's a very beautiful one. Like once you use that, you will see not this one, but ठीक है. This also serves almost the same purpose. As of now on S&P, this gives you a composite difference between the people who are buying or people who are selling. But if you follow tick is market internal. It gives you a very clear indication where the market is directionally moving. Okay. So as of now, market is saying I'm at the peak. Look at here. Every time it goes up, it has a tendency to go down. So it's a range. Right now you can buy here and wait for it to go to 1800, or you can short here and you'll be in a much better position. Look at here. Every time it reaches about this range, next few candle, it has to go down. All right. So there were questions. So question. Where we
Naval,
I think
Hi, Naval. Sorry, one question. I got confused here. Like each of these candle is showing the day, means representing the day, or
it's
what
1 day
kind?
candle.
1 day candle. Okay. Got it.
And the green, the blue ones are practically showing you, yes, the market is currently buying. So this is the bottom. So
Mhm.
let's do one thing. Let's open out grid. Let me just take this out. Detach this one and change to ES. Okay, so come on. Here, both change the same thing. Sorry, it's like boom, it's somehow it's changing both the sides.
Naval, you can unlink both these screens.
Where is the unlink button? There is.
Beside yes, you see 8, right? Unlink it. Yeah.
So let's see, it gives us signal on the daily basis 1 day. Let's see, somewhere here, okay, 820. Okay, this blue line came down, and look at the S&P at 820. This is 820, this is 820 right there. S&P was 3380, 3340 range. Okay, 33, 30, 34, 40. It said at that moment buy. Okay, and from there it went up to right there. So it's like you have to understand the trend of ticks, and I don't want to confuse you with so much of market internals, but yes, this gives you a overall idea where the market will get resistance or market is going to get support. Okay, now coming to the actual trades. So this is what we have talked about, scalping. So let me just go to the normal trade. I have made my styles, so I use this one for my S&P trades. Okay, so in this case again, like these indicators, I will share you these indicators. This is by default the scalpel alert from TOS. This is default section. So here you can buy. This usually tends to update itself after 2 or 3 candles. So you have to be very mindful when this arrow is getting printed. Okay, but this gives you a reasonable information that yes, market is trying to go up. This 3 flag, green, yellow, and red, this is a indicator which tells me if something goes above the green line, it's a breakout. If something is below the red line, it's a breakdown. So I tend to buy or above the green line or tend to sell below the red line. So these are the indicator. Again, for a future trade, you have to make Fibonacci levels, which gives you a long-term direction. So here, for example, I am making a day. I'll see my drawings. You have to find, let's say here, because this was the highest point and this was the lowest point. So we'll start from the highest point to the lowest point, and there is your resistance and your level. Fibonacci plays a very important role in the levels and in your direction. So right now you saw that market had to fight really hard around 34, 36 area and 33.80 area, right? So here it had to fight very hard. Once it crossed it, now the next range was 34, 60 and 3500, which is trying to reach. So when you're trading an overnight trading futures, you have to respect the lines, which gives you the confirmation right here. That green line is above the red line right here. So it means that yes, the trend has changed. If you see the TTM squeeze, it has from red, meaning deep negative trend, to light, light, light yellow, 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 meaning that yes, it has moved into a different direction, but slowly and steadily it is going out from the negative bias. And then you have blue, it means the positive buy has started. Blue with the green dot, it's a confirmation of the positive bias. Okay, so here you got one confirmation that there is a crossover. You got the second confirmation that yes, there is a positive bias and there's a blue color candle on the TTM squeeze. It's on the daily basis. So you change your direction. Up till here, you were short. Now you have to go long. If you buy here, which was around 3,400, 54, you would have made 90 points. So based on this, you are going to play a 30-minute directional trade based on the levels which you see on a daily chart. This gives you a direction that my upside target is 34.36 first, and then I have 3,500 in my mind. Because these are daily candles and you can trade a 30-minute candle anytime, right? So you will see that on a 30-minute candle, right? As soon as it came first, it crossed here, you went up, but then it told you to go down. So either you can trade it or you can leave it, or you just follow to go long. See, here it gives the direction that yes, it's going to go up. Plus it made a dodgy. It was coming down and then there was a dodgy and then there was a up, meaning that the trend was changed. First it was trying to go down, then people got confused with the price action, and then people got fine that yes, everything is there. Then there is a hammer, which is a confirmation. So right here, you should go up for a 30-minute trade. And what's your target, which was shown in the 1-day chart? For that target, you are going to go long. Stop loss here is this green line. As soon as you go below here, or if you want to be a conservative trader, this is your yellow line, which is 34.56. Anytime ES goes below 35.46, you have to go out, no matter if you're in loss. But if you follow the principle of 3 candles, which I always use, 1, 2, 3, I should be out somewhere here. Okay. So in order to trade the ES during the market hours, first you have to go into the daily charts, look at where the candles are, which trend is on the daily basis. If it is positive bias, go towards positive bias, wait for the dips and buy them. If let's say it was negative bias, don't try to outsmart the market. Just look at the data. Here market was negative and the trend was increasing on the negative direction. Just hold your long position or exit or make shorts, and then follow the 3 candle logic, 1, 2, 3. And what will be your target? If the candle is rejected from a 50%, it's going to tend to touch 23.6 always. So here it got rejected, it tend 23.46, and even it went down to 0%. Again, once it crossed 23.6, it's gonna test 38, and once it crossed 38, it's gonna test 61.8 for sure. These are the rules for Fibonacci. These are the rules which are also used when you are designing the Elliott waves. So once you practice them, you will you will be using them like you use brakes on the car. So once these level cross, you know when it is going up. Once these face resistance, you know it's going to go down. Once it crossed 78.86, 78.6 percentage, it is going to test this. If it fails, it's going to go back and test 23.6. And that's where our support is 32.90. Okay, so you just frame your levels in futures first on the daily charts, and then you go back on the 30-minute chart and try to see where you can enter best. If the 30-minute candle is on the top towards the highest point on the daily chart, there is no point going long there. You should wait if it breaches that level, or you can try to be a short and then you go into that scalping for 5 to 7 points. If you know that yes, it's near the support line, you try to buy it and then keep a stop loss of the corresponding yellow line and then go long up. All right. And this has nothing to do with any kind of flows. you have to be very sound with your candles while trading futures. If you want to practice first with the mini micros, which are $5 a lot, and that will really help you build your technical uh, acumen for trading these futures.
So if you're looking at it right now, Naval, doesn't it look like you will not be trading this because it's already way up?
That's what I was saying. I'm not trading
Okay.
anymore
Okay. Thank you.
because I don't want to get stuck,
Yeah.
right? And I don't want to, like, because futures eat your dollar amount pretty quickly. So if it goes down to, let's say, 34.60, all of a sudden I'm in loss of $800, right?
Right. Mhm.
And it can happen, like, if market opens 6 o'clock and it opens below 34.60, 34.50, it's well below my stop loss. So
Yeah. And how did you set up these green and red, yellow
these are
lines?
indicators, which are free indicators, which I can show.
Right. Thank you.
This is an overbought indicator. Then I have couple of indicators again. You can set them up for, this is the profit booking meter. So as soon as this is above 10 right here, it's time to take profit. You can, once you are fine with the futures trading, you can apply the same logics to the stocks, and you will see that yes, almost everything work like this.
Yeah, that's what I was asking, how to set that up, the lines. It seems like the same concept would work.
The concept is always the same. It's just
Yeah.
how you interpret it. Because too much information sometimes becomes leads to too much of confusion,
It's
right?
like whatever works for you. Yeah.
Yes. So you have to see whatever works for you, whatever gives you a right back testing, right? So if,
Hmm.
let's say, you set up all this, how do you know talked about that? Yes, whether this thing works or not. If it doesn't work, try
Hmm.
some different time levels, time frames. But you have to respect what you see. Don't hope that yes, today I had a dream that tomorrow market is going to go up for
Yeah.
2%. Let me buy. No, you will. Right now, I don't want to, like, say this again and again. Most of the people here have seen only one sided market. You buy the options, next day the stock went up, and then you're making money.
Hmm.
But now there was only two or 3 weeks of volatility, which, like, broke down many accounts.
Yeah,
February,
because we've
March.
been in the bull market for 10 years or less, right?
Yes. So right now, I'm not saying this is the end of the bull market or session. No, you have to respect what you see. That's it. If you're looking at the candles, you're looking at the data and gives you confidence, yes, go ahead and do it. Don't trade on hope.
Thank
Uh,
you.
excuse me, whoever is not talking, can you please go on mute, please?
So
Yeah.
I can
Naval,
address
what's your
questions.
view on probability? Like, if it goes up, okay, there is chances to come down. Is it 50-50? Because I end up
See, again, this
taking
is
on
something I
that
don't
and
know.
it goes bad.
See, this is something I don't know. You don't know. Even market doesn't know. Okay, suppose tomorrow China nuke America. Nowhere in the charts it's there. Nowhere in
Mhm.
any option activity it's going to come. It will not come. But you will start to get an idea on some of the news events. Not all of them. Some of the news events which are going to happen. For example, there's a Fed event. So you will see that before the Fed event, probably half an hour, 45 minutes, you will see that candles or the volumes is going up or going down. That gives you an idea that what is going to happen after the Fed event. Okay. Similarly, the same things can be applied to ERs. In some of the ERs, they may not be 100% correct, but yes, it gives you an idea that yes, potentially the stock can go up or down. But you cannot predict every day that yes, market is going to go up or no. You need to know your levels that yes, at this level, market face the resistance. And what let me explain what the resistance is. Resistance is basically people are there at that level to sell, and the supply is much more than the demand. That's why candle is not trying to break out. It tends to go down because there's too much of supply. And who are supplying? We traders tend to never short. We always try to buy. And big funds, they try to hedge their positions, so they short, they buy options and do that. And in shorting, there's a huge risk. That's why very few retailers do shorting. So
Now,
yes.
Naval, this is Ravi. I have a quick question. You're talking about the supports, right?
Can you be a quick little loud, please?
Yeah, you're talking about the supports. How can we set up the supports? That was a good point. I just
Okay.
want to hear.
So let me show you the support. Don't look out for a setup. Ignore this. Okay.
Mhm.
Let me go to the daily chart. Look at here. These three candles.
Okay.
Okay.
Mhm.
Market went up, came
Yep.
down,
Mhm.
and at this moment there was a buying which comes.
Yeah. Uh-huh.
Okay. It went up, there was a selling. Again, it came down to this level. There was a buying which came down. Like people were buying here. Again, it went up, it goes down, and again at this level there was a buying. This is your support.
Okay, got it.
When people are buying at a particular price.
Got it. That makes sense.
And this is your resistance because people are supplying. I want to go out, I want to go out, I want to go out. They are supplying here.
Okay.
Every time you find a resistance, you will try to test the support. Now, if you draw a regression channel here, right,
Uh-huh.
it will give you, because I draw a Fibonacci retracement, but if you draw a Fibonacci retracement from here to here, you will see that all these levels, let me just draw that. It was 3,400 something here from and 2176.
74. Oh, yeah, 2200.
See right here,
Okay,
it
got it.
went down. Let me just correct the numbers. 2174, 3398, 25. So look at this. Here
Got
there was a
it.
support, right?
Yep.
So 50% was a support. So my like experience with Fibonacci is it always works no matter what.
Mm-hmm.
You just need to understand once you cross 23.6, you are going to test 30.82 in a straight line. It will
Okay.
do that. Once you
Okay.
cross 38, you're going to test 61.
61. Okay.
Yes. If you get a rejection from 50, you will come back and test 23 or 0.
Got it. That makes sense.
So as soon as you cross 61, your next target is 78. Above 78, you're going to test 100.
100. Okay.
So
That makes
again,
sense.
at 78, it found so much of supply, right? It
Yes.
tried to
Yes.
cross, came back, cross, didn't succeed, cross, didn't succeed, cross, didn't succeed. So this is its resistance. Once it crossed, it never came back.
Got it.
It went up, 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 and up.
Hmm. Yeah, you can make your own decision to exit wherever you
Yeah.
want after you feel
So you
upward
need to
risk.
be mindful of the fact that yes, these are mathematical numbers, and all the algorithms, all the machine learning and everything, they respect the mathematical numbers because they are based on those, right?
Yep.
If you pick up the right numbers to begin with, you're
Mm-hmm.
going to align yourself with those algos.
That's
And
right.
you will find these levels proper. You will find the support levels proper. You will find the resistance level proper. And then you use your 30-minute chart, because once you know the direction, once you know your levels, you wait for the right level to entry.
Okay.
And that can give you a 30-minute chart.
30-minute chart. Yep. Okay. Thank you very much. This is very helpful for me. I was looking for this for a long time. Thanks, man.
No worries. Anyone else?
Someone is asking in the chat, like you're using the band on the blue candles, right? So what are those blue candle band thing? The green, yellow, red you're talking about? Well,
This one or these one?
yeah, this one.
Reversal. These points. They are
Yeah.
indicators. Again, these are trend indicators.
Mm-hmm.
The red one tells me that yes, there's a reversal because it failed the top. It failed to cross 78.6. So these are lagging indicators. Okay. At this moment, I will not know about this. Only after here, I will get to know that yes, there was a indicator which was printed. But it confirms to me the next day when I'm looking at the market that the trend has reversed. The purple tells me that there's a neutral trend. It's trying to go up or go down. And the green confirms me that yes, there's a buy trend. But these are lagging indicators. The prime indicator is the Fibonacci extensions, the volume, and the candle itself. The third important thing which I use is DMI. And I have reiterated this couple of times. DMI gives me a clear indication of what is the strength of this market. So in this case, if you see, there are three lines: green, blue, and red. Green is the positive strength, red is the negative strength, and blue is the strength in the positive or negative. Okay, so right here, the blue is up and the green was here. It was telling me that the market is up. There's hardly any weakness in the market because red is really down and the green is also moving up. So there's no point shorting this market. Here, there was a crossover. The red came up and the green came down. Now the green has still not crossed too much. It's still well below. If it goes above 25, it's good. But as of now, it's 20, right? So 20 is still like an all right level. I'll not be confident and say, okay, I still am positive about the market. No, I will wait it to cross 25 and the blue line should also be about 25. That gives me a confirmation that yes, market is now positive.
Naval, what did you say? What was the blue line again?
The blue line is ADX.
Okay, thank you.
You can use this by default item, which is DMI. Give me 1 second, guys. My laptop battery is gone. Give me 1 minute.
No problem. Thank you.
Can you explain? I don't know where I left on the questions.
You were telling us about, I was asking you about the lines, what the blue line meant. And
No,
you
no, no.
said to
In this
look.
chat,
Oh, in this chart, sorry. You
chat,
were,
people have set up so many questions here. Like EMA and SMA, EMA is a little fast as compared to SMA. It's like whatever comes forward, I use it. It hardly makes me any different. EMA and SMA. It's a simple calculation that's an exponential. That's it. But because I'm not looking at their values, I'm looking at their trend. So they almost work back to back. So this is to Vijay Koripala. What's a good suggestible time to scalp? 3 minutes. 3 minutes is tried, tested, and best time frame to scalp futures. Can we buy calls or puts only for futures? I didn't understand. Yes, you can buy call and puts for futures. The risk will be the amount paid for. Yes, that is correct. But there is no stop loss in the future options. Also, like for example, the future closed at 5 p.m. in the evening and 6 p.m. The volume in future options may not be too much until 6:30, 6:45. So all of a sudden, let's say you buy a future option of 3,500 call for $20. All of a sudden, you will see there's a buyer at $2 and the seller at $50. So it tends to take time to settle, but once it settles, you will find a range of 1.5, maybe zero point 0.5 for the future options. During the daytime, the difference between the prices is 0.25 in the future options. They are very, very liquid.
Naval, I have a question. This is Anish. When you said the Fibonacci level cross, let's say it crosses 20, 23 Fibonacci and then 38 and all.
Mm-hmm.
Sometime it crosses and then comes back on the same day. Do you mean crossing meaning closing above, or
This
even
is a
going?
day chart, right? So in the day chart, it has to close above it. And Fibonacci should also be should always be drawn on the day charts.
Right, even in this case, this is a day chart, but let's say your level is, I think, 78 Fibonacci's, can't see
Right
properly,
here.
right? But it could go and come back. I mean,
Yes.
right? That will not qualify as crossing that level, right? As per your definition.
No, it qualified as crossed that level, but failed to emerge towards 100. So it crossed this, but it failed. So it will come down. And failed confirmation gives me like 1, 2. So as soon as you see this sky blue and purple, this is based on MACD and this is based on Bollinger Bands. So as soon as you see these two, it means that there is a supply which is happening here and it confirms. So I use multiple indicators here, right here. Look at the TTM squeeze. It has converted right there from sky blue to dark blue. It means it has lost strength in the positive side as soon as it converted from sky blue to dark blue. Look at the RSI. RSI also started to dip down, right? So here I will see that end of the day, I will look at this chart and I will see, oh, it's not working out. It should have stayed up. Now the RSI is also came down from the level 60. The TTM squeeze has also converted, and the DMI red line is also emerging towards upside. So that gives you a confirmation, and then boom, it goes down. You may not get the shot right on time, right? But if you know that as soon as it goes below 78.6, it's going to test 50%. You can make a shot right there. And as soon as it goes below, see, you can make shot right here. It's going to go down and test it.
Yeah, I was trying to think from the standpoint of, let's say, overnight futures, right? If we are really very near to 78 Fibonacci and all, and let's
Then
say
you
we
should,
do not know it's going to go up or down,
yes, then
then
you have to look at other indicators, what they're telling you. And you have to always look the screen from left to right. If the left to right is saying that it is moving up, then you have to back that and see. Plus, you have to see where these 2 or 3 indicators, RSI, TDM squeeze, or DMI telling you. Combine that information because only crossing this doesn't confirm it, right? You have to back it up with a couple of more things. Once you have that backup, that confirms that yes, it's going to face some resistance or it's going to break out. And once it does, then you are good. You're good for at least 100 points.
right. So basically, that confirmation will also require maybe 1 or 2 more candles, meaning like 1 or 2 more days, probably.
1 or more 2 days, yes. And if you're checking into the intraday, you have to see whether these support lines are getting respected or not. Because intraday, it might come, test, take the support, go up, test, take the support, go up all the time. That's why I'm saying that first, like before you start your day, right, or end of the day, you make these charts for daily. Look at all these prospects, that what is happening. Let's take from here. Let me remove the last drawing. Yes. Okay. So let me make this was 31, 35, 87, which was recent high, and this one was 3198. Let me set up them correctly. 87, 3198. Okay. So at this moment, I'm looking at the market. Okay. Friday, it was closed right here. So I looked at the market. I see it closed about 61.8, which is a good sign. Okay. The trend has changed to plus. RSI is moving up. The green line is here. If you can see, the green line is here. Red line is below. It's up. But the only concerning thing for me is lack of volume. It tries to move up, but there's hardly any volume, right? So combining, it's like a conditional operator. You have to do and. If that works out, you are on a good trade. If you tend to ignore the fact that yes, there are low volumes and you still try to buy it, God knows if it touches here or it breaks down right there. See, simple as that. You're trying to make a building. Okay. Let's say yourself as a construction engineer. You're trying to make a 100 floor building. Now, as soon as you're going up, and you're not providing the support at the base, what is going to happen to your building? It is going to fall. Also, look at the price action. Here, it opened here, closed right up there. Opened here, closed right up here. Opened here, closed right up here. But look at the volume. It took it up, but no, there were no like real buyers. People either covering their shorts or people were trying to just stay out of it. If you had good volumes, look at the volumes on the right side. Almost two times or three times, right? As compared to the volumes. That's why you have to see where these volumes are coming from, what is the strength in the market or not.
Right. Yeah, and the candle height is also going down. It's the size of the candle is also coming down.
Yes, so this is making an ascending wedge. If you know, let me just draw that. If you see here, it's going right like in this direction, and this is going right this.
Yeah.
Right. And if I join the middle of all this somewhere, it's going to find resistance right here, right? And with the volume here. So around this range, there's a big or heavy resistance from the candles, from the volumes. So unless and until there is a positive news, I will tend to, I will tend to, come on. I will tend to go down.
Okay.
So again, it's like the data, as I said, the data is in front of you. How you read it, it's entirely your choice.
Right.
Some
Thank-
people will try to buy this dip. Some people will try to short this. So there are buyers, there are sellers. How you see it, for me, it's not a buying market. I would wait, wait, and wait.
Right. Probably a dumb question, Naval. Any reason you're using? Is it because of the candle trading only you're using candle, or why not use Heikin-Ashi or any other method?
Like I'm used to it.
Okay.
People use Heikin-Ashi. Like I have one more style which I use. Sometimes I even post that. This is Heikin-Ashi. I use this for some confirmations. Yes, where this market is heading. And I always tend to prefer 30 minute a day. So here again, it's making that ascending wedge. This is swing arm setup where I use Heikin-Ashi. Otherwise, in normal charts, I use the candles.
Okay. Thank you.
Any other question, guys?
Naval, you showed that band, right? That green, yellow line and that red with indicator on the ear on the. So what is that? You said the scalp, that indicator. Yeah, that one.
Medium scalp, the arrow.
Right, right. No, how do I set up in the toss? I know that green, this particular green,
This
yellow,
one,
and red.
I have to share this. This is
Okay, okay.
this is something I bought initially, but now this is free, so I can share it.
Got it. It's from. It's available in toss, or that's something you have to share.
It's not there in thoughts. It's something like they're available on different website.
Okay.
Like I bought this 2 years back, and I was using it. Now they have made it free, so I can share it.
Sure. Thanks.
But again, you don't have to worry about these indicators. If you understand your candles clearly and make your Fibonacci properly, this is only for the confirmation.
Okay, so in general, like watching that 12, 34, and 50 EMA with Fibonacci should give some good
It
idea
will
about
never fail you.
support and resistance, right? Okay,
It will never fail you. I've tried
got
it for the last 7 years.
right. No,
It,
no, 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 that's a good way to go with support and resistance. Yeah, sure, true.
and one more thing regarding future options, do not go heavy on future options. Never ever. 2 lots, 3 lot at most.
Hey Neville, this is Kiran. You shared about Fibonacci, right? Well, how do you know which high and which low to choose when you draw the Fibonacci?
Like you have
Because
to choose, like for example here, when I went to the daily chart, right? I made it here. I was trying to look for a recent high and a recent low. Okay. But when I go back, and why did I choose this, not the previous one? Because the previous one breached the 100% line. Okay. So now this becomes a proper Fibonacci level for me, that this was the latest high and latest low after the high was made. And if you see in March, April, this was the latest high and the latest low after the high. It's only after the high you have to consider that. If you were here, you don't know, because at this moment there was up and then it went down. But you went down, and you see here, and then there was up. Only then you will be able to make Fibonacci. So up until 3 or 4, 5, maybe 10 days after it made the bottom, you get to see a perfect Fibonacci, not before that. or if you were following the same principle, right, which I simply said, whenever there is a crossover, red above, green below, short. If you short here, you would have made good points because it never crossed the line until here. And when it crossed, you were still in profit because you short right there. So whenever you do this crossover of 1234, it is not going to hit your stop loss ever. It will ask you to exit well above your price of entry. The only thing required here is patience, which like I don't have. Many people don't have that patience of this crossover to work. This is always going to work no matter what, which circumstances, which market it is, volatile or practically sad market where there's hardly any movement. This is going to work. 1234.
So you always do scalps and futures, or do you?
I do
say-
scalps like sometimes, not always. And for right now, I've decided I'm not going to do the futures until the elections because one news and I'll be boom out. I'll be under 10 grand, 15 grand for no reason.
You mean even for scalps?
See, if news comes and you have your stop loss, futures tends to jump stop losses. And if they jump, like suppose right now, this is 34.76, right? And you went short. Market opens and there's a news that yes, Pfizer has made the vaccine. Do you think it's going to stop at 3,500? No, it's going to jump right up to 3,600. And you'll pay the price, $75 in loss. Scalping is very, very skilled.
అర్థం కాలేదు.
దీంట్లో పెరిగేసే
Okay.
సో పెరుగు టెక్నిక్
ఇది ఇచ్చాను. ఏంటి?
Anyone?
Please go on mute whoever is not talking, please. One more question. Naval?
But someone has to like be on mute. Who's
ఇట్ వాస్ ఆల్ ఫ్రోజన్ వెజ్జీస్ కదా ఓకే
Nagubai, can you mute everyone and then
I made you the host. Okay, that's the reason. Okay, let me reclaim and mute all. Oh, there was one question, Naval. Why are you not drawing fibs from low to high to see the target?
those are extensions? Low to high. I don't try to do that. So if I'm here and I'm drawing here on this side, because this thing, I don't know where it's going to fall. I don't know where it's going to face resistance. And for me, that never worked out. So supposedly, let me remove this. If I try to make Fibonacci extensions, let me just clear this entire piece and then studies, remove studies. Let me just have candles. Remove drawings. See here, first I will show you why I don't do that. This is what I know is my top, and this is what I know is my bottom. Okay. Based on this, I know these levels, right? But where it goes, I don't know. For that, I have these extensions. So once I cross 35.85, the next level I should be looking for is 38.20. And that's it. And this is based on this fall. If I try to make extensions, for me, that never worked out. I always get wrong information from that. That's the reason I don't use that. I always try to create Fibonacci retracements and the values based on the retracements, because those things have happened in the past, and that gives me a confirmed base of support and resistances. Does that answer it?
Raghu, looking at it, how did you get that 161.8%?
Automatically come.
Okay.
This 261 will automatically come.
Okay. Thank you.
Naval, one question for you.
Yes.
Many times you send range for the market. So you guess that range based on Fibonacci level or based on the open interest?
See, first, let me ask everyone, how many people know what is an open interest?
Yeah, I know. I asked that question.
No, because you asked it, I want to understand from everyone else. Because open interest in futures is different. Let me just show you. Future trades, open interest. Okay, I'm confused now. Okay, let me explain. Open interest is an open position on an instrument. Okay. Open interest on a future does not tell me my support level, does not tell me my resistance level. Open interest tells me that yes, if my futures are changing the direction and if there are short interest, those short interests will be in loss. So they will come back and try to cover their position and I will have more upside. Similarly, if the open interest is high on the positive side, you need to also understand the open interest direction as well. That how many of them in the open interest are adding to the position, closing to the position, what is happening to the price on that open interest. If that open interest is added when the price went up, of the open interest went down when the price goes down. So all of that helps you in getting into a direction. It does not tell you which is the support level or not. Okay, that's the first thing. Second thing is I take Fibonacci into consideration for my levels. Okay, then I also look at the daily candles. I look at two specific time zones, which I don't think many people use: 35-minute and 4-hour. 35 minutes specifically, just because somebody like who's my guru, he used to use that and I follow him. So he used to tell me 35-minute candle is really good, just follow that. So whenever I see a buying range in the 35-minute candle, right, that is my support level. There I will see that yes, it's gonna get bought, or if it is resistance, it's gonna get sold. And then I look at my Fibonacci levels that yes, once it goes below that, what is the next level of support? So if you do not do anything, right, you simply clear off your screen, remove everything. Just look at the candles. Look here. It tried to go up. No, it failed. It tried to short. It came down, failed. It tried to go up. Nah. Here it's got a hammer. Look at this. It tend to come at a certain point and then it took the support, right? I don't have to create any fancy regression journals or anything. I just need to look at the candle and look at here. Let me just draw a line so that everybody sees it. Look at here. There was a support one time, two time, third time, fourth time, right? So when I'm here, right, this is the right line. Yes. See, so when the market went up, it went up, but it came down. Look at where it took support, 3198 region. So again, this was a buying entry. But my concern was when it is buying, look at the volume. It's drastically going down. Every time it is moving up, the volume is going down. You're going up, but don't you go up, or you like to go up with strength like here. You went up, you had some good volume backing you up. If you went down, you had some good volume bringing it down. So if you have low volume, it hardly like suggests anything. It tends to fail at some moment. And in case of going upside, you have to see right there. Here, it failed here. Right here, failed. That was 3420 level, which we discussed a couple of times, right? It failed back. Once it crossed it up. Now what is the next target? There's no gap here. And one more thing, ES will never have a gap. XPX will show you the gaps. And they are really, really important. XPX, you have to see, there's a gap. You see, there is a gap. Here there is no gap, which is good. A candle will always come back and try to fill the gap, and that candle is a strong candle. All right, there is a gap here. You see, from 3308 to here, which is low 3332. There is a gap. This will go up, but this will 100% come down to fill this gap. And once it comes, that will be the best moment to enter into the market. And these are the best plays you can ever have. You remember I was talking about Apple at 118, that it has gap pending at 106 and 96, 92. It went down to 106, 104. It filled that gap, and since then it has only moved up slowly and steadily and tries to come back to 118 level. So a gap fill trade is always a trade you should follow. And a gap fill on a daily chart is tremendous chart. You have to see the candle and then trade on that. You can trade blind on a gap fill. It was always work out. Any other questions?
Thanks for the answer, Naval.
Naval, I missed, I think Vijay was asking similar question. We saw you added simple moving average versus exponential. Any particular reason of using SMA versus EMA?
Not really. Like they are just because I use the direction. I don't use the specific values of EMA and SMA because I use them to cross 12 and 34. Once they cross it, in exponential it will be a little fast. In SMA it will be a little slow to cross that. Maybe a miss of one candle.
Yeah, I got disconnected for 5 minutes. Okay, thank you.
So now, but you use the same now. If you were to use the EMA, do you use the same numbers?
I use 1234 no matter what.
Okay.
See, this thing has worked for me and I don't want to change. And once I have confidence in 1234, I never tend to like look into any other numbers. People use 821, people use 934, people again, like it all depends on which gives you confidence. That yes, you're looking at a trade and that trade makes sense to you, and this is the level, this is the candle, these are the SMAs. Just follow that.
And do different instruments have these different SMAs, or or they're all
See,
same?
SMA is a mathematical formula.
No, I'm not talking about that. The numbers that you choose, right? That you chose 12, 34, and 50, right? Is it no matter with any instrument or particular instruments use
No, I
different
use it for
numbers?
everything.
Everything. Okay.
Now, the other thing which we have talked about is like when you see the, let me show you. When you see something like this on black box, or when you see something like this, there are people buying. For example, here, Apple. Okay. You see people have bought. Okay. And they bought at 1,272,000. This gives you a confirmation on your candle that yes, people are buying with the perspective that there is something which is going to happen in Apple, but it doesn't confirm it. And when you buy, because these are like, for example, 1 week, 2 week, 5 week, here it's like 5 to 6 weeks away. You can buy it, but it does not guarantee you that yes, it's going to work. You have to go check into your chart to get a confirmation. Once you get a confirmation, then you should follow these flows. If you start to blindly follow them, it may work out for 5 things, it may not work out for 2, and that 2 will be a bigger loss than those 5s gain. So better to see if something is happening. For example, let's go to Apple now, right? Here, look at the volume. There was an inside day here, boom, boom. It tried to break out, 1 candle, 2 candle, maybe 1 more candle. And that should be it. Where it was facing resistance, right at this level. Or at this level. The candle went up, right here went up, got rejected. If it crosses this level, yes, it gives you confidence that yes, it should now work out. So this is your prime target. So when you're looking at the futures or your actual any stock, you have to just make sure that yes, this, if you do not want to draw any of the Fibonacci or any of the fancy things, no, just do this. And this was the gap which I was talking about. There's a gap here which needs to be filled. When it failed, I don't know, but it will 100% come back and will fill the gap. Okay. Any other questions, guys?
One Viramani is asking, like, I see high to low duration is 5 weeks. Is the same duration we can take it for next target?
I didn't understand that question. Like
on the ES, you were saying like from high to low, it's the duration is 5 weeks.
High to low.
Yeah.
There's one more tool which is Fibonacci time extensions. This is really interesting if you want to use it. It gives you a break that at what time interval from high to low there is an expected increase or decrease. So you will find resistance in this range, you will find resistance somewhere here and here. But I have tried it, it works fine, but I will not recommend it because it's a little complex to understand. So I will not go by that 5-day logic, 5-week logic. That it came down with a 5-week logic, it should go up in a 5-week logic. No. If I understand you correctly, if that was the question.
Now, well, I have a question.
Yes, yes.
Going back to Apple again, you said it's gonna come back. We do not know when to fill that gap.
Yes.
So TD Ameritrade allows you to create OCO orders, right? Which means buying and selling with a stop loss or something paired with it.
They are called OCO orders. One cancels the other.
Right.
Yes.
So if someone has capital, then wouldn't it be advisable just to set up the order at a buy at, let's say, 95 or 96?
100%.
Right. Okay. I mean, you already said it. Those trades are awesome trades. It always comes back and
Yeah, 100% awesome trades.
Yeah.
You
Alright.
can test that on any of the stocks, any, and you will find that every time this has happened, stock will see once Apple come back and test this range, which is 96 or 93. Okay, it closed at 96.19. If it touches 96, it's the best trade for your life to enter in Apple. If it comes 96, it will come and it will beat 137 after it goes above 96.
And the gap, the same thing is true for the upside as well, which means that the stock has dropped significantly.
Correct.
All of a sudden.
That's why let's go to my favorite. Here. This every time there's a gap, there is one gap which was filled and came down. Then there's gap here which was filled. But look at the volume. It came down, down. Only in the negative news, it came up. The volume came up. So if this, there are gaps. Look at here.
48, okay.
If it crosses 250, I'm telling you blindly, it will cross 400.
Got it.
It failed right there twice. Once. And I don't know how many people started trading recently or in last 10 years. This was the prime stock of Dow Jones. This used to run markets. Only until 2019, this has fallen back. Otherwise, this was the quickest stock trade. It used to open and used to take the Dow Jones up and down.
Okay.
This and one of my other favorite stock, Caterpillar. Caterpillar has filled all the gaps and now it's so strong. It's going to go up, and the target for this is this range, 189.
Okay,
So
thank you.
for BA, FIB, why didn't you go to the lower lows like 145?
They are recent buy. So, because I made once it went to 234, if I go here and go to 89, you will see the more reasonable levels. But just because it has already breached this level and went up, I change them. I can try this one, which is 400 to 89, and let's see what it comes. 1 second. No. Let me just remove the drawing. This was 378. That's the most I can see in the daily range. And this is 89. So 156 range. Look at this. It was finding the support at here, 156 range. Right? And it has to cross 198 for the confirmation. And also if I do my retracement, during this period, it was taking support right there. Below it, it went there and tried to find the support. And I drew this one just because this was getting so tight. And I wanted to see what could be the best outcome from there.
How about from 232 to 145?
That's what I had originally. From 234. Wait, not this one. Shit. This one I had. From 234 to, I should move it to here now because it came to 145.
Yeah, that was my question, going to 145.
So now it has 165 support, 165, 95, 178, 189, 234. Like these are the small points. Now it has crossed above 165, so I'm targeting 178, 179. It can happen in one day, it can happen in 1 month, I don't know. But every time it's going to come around 165, and if it takes support, the next thing is going to go and test the resistance of 178. When it crosses 178 this time, it will definitely touch 200.
So Shravan is asking, how can we set up OC orders in TOS?
Huh? What's that?
How can we set up OC orders in TOS?
OC orders in TOS. Like I can show you.
While Naval is setting it up, I have a comment on same thing on the OC order. Naval, I'm permitted to speak?
Sure, sir. It's your.
So again, from the personal experience, TD Ameritrade, whoever has an account, they have a service and it's free. If you call them and ask them a demo for like a 1 or 2 hours, they'll literally spoon feed, show every single thing, like all these OC orders, any cool thing, making chart, adding studies, and many things. So I already went through a couple of sessions. It's all free, and they are more than happy to do that. All you have to do is just call them.
Like I'm used to do the orders from mobile, and I don't use the screen, but you have that option of OCO advance order when you put in the limit. So if someone knows how to use the OCO orders on screen, I can forward the screen sharing because I do it from phone. I only use the desktop version for making charts, nothing else. I use my phone to trade and do everything. In phone, you have to simply go and then you can see this is your main order. And once this is executed, this is your stop loss or this is your profit booking order. Only one of them will get executed. But I don't know from here to do it because I don't use this to do it. This is my dummy account.
Yeah, no, the easier way is if you click on the right tab, Active Trader. Yeah, and here also it allows, it has, if you click on the single, then OCO.
Yeah.
And if we just click anywhere, just buy, and then
OCO with two.
no, don't buy. Like click anywhere for the limit order. Just pretend as if we are doing a limit. Yeah, now say edit. And that will take you to that screen there.
And then you can add the legs to it.
Right.
Yeah, I find this so complicated that I use my phone. And that's why like I don't have any idea on this.
Yeah, only reason I was mentioning because someone was curious, but they have many other ways you can save the order template and make it like if you're always doing 3 candles or a stop loss of 5 point and all, you can actually pre-build.
I have set up everything on my mobile phone, so I don't like tend to go into all this. This is too much complicated for me.
Right now,
Because I am sometimes like watching match. I will not have a laptop or desktop in my hand, but I still have my phone. I have all these charts there set up properly, so I see and I buy and sell.
Got it. Thanks, Naval.
So
someone is asking about Amazon chart.
Amazon. Amazon has done some good. Huh. Let's look at Amazon on weekly basis.
Like you mentioned for Apple, it's like gap ups and all, right? So same way for Amazon also, do we have that?
See, first thing, there's a first here. Look at this one. This is a green candle, and then there is a red candle. Red candle body was bigger than the green candle body. So this is a bear engulfing pattern, meaning that yes, the trend has changed on the weekly basis. Look at here. There's a hammer, and the green candle is up. It is a bullish engulfing pattern. Okay, on the weekly. So the trend for Boeing is, oh, not Boeing, Amazon is positive on the weekly. Let's look at the daily charts. On daily charts, it took the extension 261, the support, and now it's going up. Now, I think it will try to test 32, 33, 44 range at least. 3350 range, at least 3350 range. Once it crosses that, it will make new highs. And if it goes below this 3090, then it has to test 2532.
Is there any like gap up or anything like where we can go and?
There was a gap here. It was 3074 to 2972. There was a gap. 3000.
This it will come back again there, right?
No, this gap was filled.
Well, okay.
This gap was filled, and there is one gap here which was again filled right there. There was a gap, this one.
Okay. So for this stock, like we don't have any, like
the gap was filled, and as soon as the gap was filled, boom, boom, boom.
Okay, so that's the gap we could have entered then.
Yes.
Okay.
So speaking of Naval, the gaps, is there a percentage like how many points? Let's say if there is only, for Amazon's case, let's say even only 5 points gap, let's say it closed and then opened 5 point above. Would that still be considered a gap or?
Gap is a gap.
Gap is a gap. Okay. Okay, thanks.
And it will always come back and fill it.
So maybe Naval, I missed. What was the reasoning that it won't go down from the gap and it will always bounce back from there, or it's just observations?
The gap is that, for example, let me give you a real-time example. Okay. You are living in a society and their society has 100 apartments. Okay. Now, initially, when you were trying to buy an apartment, that apartment was costing you $500,000. But by the time you had the money, the cost went up to $700,000, $800,000. Okay. Now, again, after 1 year or 2 year gap, the price came down at 500,000. What you will do? Think about it. What you'll do? You will buy it. You will say, oh, it has come down to a price. Let me just buy it. Once you buy it,
got it.
Every other person will buy it. And this thing will work. Just try it. I'm telling from my experience, this thing just works. It's a blind trade. If somebody would have bought Amazon here just 4 days and you have like $200 up, try some other one. Let's say Facebook.
Now, as we already started discussing about the stocks, so do you think that Roku will also fill up its gap?
100%, man.
Okay. Thanks.
See, this is Roku, right?
Yeah,
Correct. The
correct.
gap. This is inside day.
Yeah.
Right? The volume is come.
Correct.
If it falls below 219,
Mm-hmm.
we are 100% going to fill this gap, which is of 230. There's a $6 gap here.
Okay.
Then there's hardly any gap. There's a gap here. 147 to 150. But that's like way too far. This is the gap which needs to be filled.
Okay.
But if it falls below this, right, there is a possibility it gonna come and fill this gap.
Okay.
This gap is still open,
Mm-hmm.
right? But interesting thing, if you people will acknowledge, look at the volume of it going up.
Correct. Yeah, I saw that.
See, there was a volume when it went up here. That's the volume, right?
Yep.
And now here it was good because it went up like from 166 to 189. That was about 35 million. But for me, every time it goes up, the volume was going down.
Mm.
I would not try to buy this. I would wait. First, I will see if it fills the gap and stays here, or it's going to fill the gap right here. If, let's say tomorrow morning, if something negative comes, right, and it touches 213, 214, and if you want to go long at that price.
Okay. Actually, I bought some puts of Roku on last Friday, so that's why I asked if it will fill up the gap or not.
The gap will always be filled.
Yeah.
You don't know when.
Yeah. Okay.
And there is an inside day as well.
Hmm.
Now, let me just go and check this on my normal chart. Okay, right here. It has the negative strength is very, very weak. So the positive strength has also consolidated. The positive strength is still there. You see the yellow line, it was getting some pushback from yellow line. It must try to break 220, 244. If it breaks, the first thing it will test is 220, and then it will fill the gap. This is the gap.
Okay. Understood. Thanks, Naval.
Is there any screeners or anything we can find for like gaps?
Screeners,
And
I'm not good in screeners. I tend to see my logic is simple, and I've been like trying to convey this to everyone. Right now, you all have seen one-sided market, right? One, just tell me how many people were shocked when that February and March thing happened. I only saw Raghubai made good money because he had one shot in SPY. He made good money in that. How many of you had your account cut to half or 40% or maybe less than that? When the market is volatile, all these things will not work. When you, because I've been trading for so long, I've seen all. So when people do not understand or appreciate what I'm telling them, then it's your own risk. I don't want to like teach you that yes, lose your own money, you will get to learn yourself.
yeah, but you said this is like if you have a gap, you said it definitely try to come there, and that is the best point we can enter, right?
The
So if
gap
you
could
have a
be both
screener,
on the upside and the downside both.
okay, yeah. But if you have any screener, like anyway, we can scan for those, like for example, like we can keep like 10 to 20 tickers, and we can have like the screener, and if they can alert a way to find it, then we can enter those times, right?
That's
Like
what I'm trying to tell. That those screeners, first you have to write yourself. Okay, you have to check and write the logic that yes, there is a gap, and based on that gap, they tell you these are the stocks, and they are about 14 or 15,000 stocks. Okay, now there will be a gap in for those 14 and 50,000 stocks, and as and when you will see the screener, you will have the chill to trade any of those. And I'm telling you, everyone does the same thing. So once you have, let me show you this. This is Buy the dip. This is buy the dip, which is telling me to buy the dip of MGN. Okay, so if I go here, AMGN, I should see buy the dip right there. Okay. Similarly, you will have something which is fill the gap. Once you do that, you will tend to see the scanned items. But which one of them would you trade? Right now it's 150. So which one should I pick? I cannot answer that.
Okay.
Right? So if you try to find a scanner and see which of the gap has to be filled, I don't know, you may get 100, you may get 5, you may get 10.
Okay.
But if you have limited stocks in your watch list, let's say you only trade in Nasdaq 50 stocks, not 5 and Nasdaq 100, only Nasdaq 50. You set them up and try to run the scan on those 50. And then be very specific that yes, my scan logic is looking into only like here. I'm scanning in all stocks. Instead, I can go and scan in my watch list and see if I have any. The answer is none. So 99% of the time you will find nothing if you run those scans.
Okay.
So check which, like the most important thing in trading is which is your watch list. Make your watch list which the trades you want to look at. That's it. And see what is happening in them. So if you try to trade Apple, make sure it is there in your watch list. Make sure you remember the levels. Make sure if you have any scanner which covers Apple, it checks Apple. Okay. Last few questions and then I'll be done. It's already 2.5 hours.
Yeah, last week you were saying like pairing and learning and analyzing, right?
I need to see people who are interested.
I think we already got like 5 to 6 trades
stock
already on the day.
and I can do the analysis on my side, but I want the equivalent analysis from your side. You tell me what will be the trade, and then you have to show me the trade. Okay, that this is the trade you took, and this is the trade you took based on this, and let's run that trade. Once we have that confidence, and I'm telling you, once we have that, let's say we tried 5 stocks, we take one lot in each of those 5 stocks and we run based on our logic. Maybe 3 work out, 2 didn't. Maybe 2 work out, 3 didn't. But after that, we will get to know our mistakes. What exactly we did wrong or what exactly we did right. So I need that kind of enthusiasm that yes, they are people are ready for it. I'm open to find out stocks which we can discuss, which we can trade. Similar for 3,000 trades, we can start that from Monday. We can pick up our study tonight and figure out any 5 trades. And based on that trades, let's start 3,000 challenge. It's not a big deal. It's just that we have to have a mindset. And Friday, I did a voice channel with everybody. So I prefer the voice channel before the market start 5-10 minutes just to discuss our trades, which we've like analyzed on the pair study and run them through. Let's see the outcome. Right.
Okay.
I want people to help me in doing this. It's not like I have to do this on myself. I want your collective effort as well. So is it done? Don't thank me, guys. Thank once you make money and show me that you made money on this. So I'll be proud of you. That will be like, I like to share so many things. I don't know how many people understand where I'm coming from, but when I'm saying something, I'm not saying in Hawa. I'm just telling from my own experience. All right, Raghubai, you have anything for me?
No, bye. That's a great session. Thanks for educating everyone and answering patiently for each and every question. Yeah, thanks. Bye. Thanks everyone for attending the sessions. The session is recorded. I will share the recording to you guys.
All right.
Thank you so much, Raghu.